This is answers to frequently asked questions about infinite banking and the tax-free cash growth warehouse strategy, brought to you by SCFSIC.
Aloha, I'm Stan Cox, Principal Broker and Finance Strategist at SCFSIC, and author of the books on the tax-free cash growth warehouse strategy. In this video, I will answer the question, why add a term writer to my infinite banking tax-free cash growth warehouse account? There are a few mechanics involved in the architecture of designing an IBC TFCGW account. And that's why you can't just go online and buy a policy designed for infinite banking and the tax-free cash growth warehouse strategy. You can go online and buy a simple term policy or a simple whole life policy, and I think you might be able to buy a simple universal policy online as well. But term policies are useless for infinite banking. They have no cash value, and universal policies are just term hybrids that, in my opinion, present more hazards than benefits. While whole life is what we use as the base of the design, simple whole life, even with the best mutual companies, takes some years to accumulate any significant cash value to put to use for the TFCGW strategy. Obviously, we want cash value, and we want as much of it as we can get, and as soon as we can get it, right? Right. Yes, I just said a moment ago that term is useless for infinite banking and has no cash value. So what's the benefit of adding a term writer? Now we have to get into the mechanics of design a little bit. The primary purpose we use whole life as the base for our IBC TFCGW accounts is the tax-free growth that is inherent in them. Then there are several additional advantages, such as high compounding interest growth, liquid access, asset protection, and so forth. Regarding the tax-free growth advantages, this is huge, and we want to preserve that advantage. But the IRS isn't overjoyed about that aspect. And so they convinced Congress in the late 80s to impose a limit to how much money we can put into our accounts and retain the tax-free growth benefit. That limitation is called the Mech Limit, or 7-pay rule. MEC, M-E-C, stands for Modified Endowment Contract. When the amount of money deposited into the account exceeds that limit, the policy becomes a MEC and loses the tax-free growth benefit. We don't want that to happen. We have another video about what a MEC is and how it affects policies, but for now, suffice to say that what that MEC limit is determined by the total death benefit or face value of the policy and the annual premium required. The larger the total face value of the contract is, the higher the MEC limit is, allowing for more money to be placed into the account without losing the tax-free growth benefit. Here's where the value of adding a term writer comes in. By adding a term writer to a base whole life policy, we can increase the total face value of the policy at a lower premium cost than it would be if the whole policy was whole life. And this raises the MEC limit, allowing more money to be placed into the account. Additionally, nearly 100% of the premium paid for the term writer goes directly into the cash value. So, when properly utilized in this way, this is the only time that a term insurance contributes to the cash value of a policy. And it does so in a rather robust way. Another benefit to adding a term writer is it adds to the ability to customize the policy. It adds another means to contribute to the cash value of your account. In addition to the regular premium paid for the term rider going directly to the cash value, you can prepay the rider premium to add to the cash value, in addition to the regular scheduled premium. Again, that prepaid premium amount goes directly to the cash value, and there is no underwriting required. As a result of the prepayment, the regularly scheduled premium may be reduced. And since it's a rider, should you want to reduce the required premium, you can cut the amount of the term rider or even eliminate it altogether. So, there are a number of advantages to having a term rider as part of your TFCGW account. The most important one is being the addition of cash value to the account that will grow with dividend interest and that you can leverage for use with the tax-free cash growth warehouse strategies. We hope this clarifies the term rider purpose for you, and if this has been helpful to you, please like this video and subscribe to this channel. Also, if you haven't yet watched our TFCGW webinar, do yourself a favor and click the link in the description box here and watch it. You will learn why infinite banking is so important, how the tax-free cash growth warehouse strategy saves you money while it grows wealth for you, and step by step, how to create a tax-free cash growth warehouse for yourself. At the end of the webinar, you will be invited to apply to become our client. Please post your questions and comments below in the comment section, and aloha for now. Mahalo for watching.